Chapman remains the go-to expert for AML sanctions and CTF, not only in Australia, but in the region for over 4 decades. A banker, a consultant, and a leader of ACAMs, frankly, in chapters, in conferences, in assisting when I was there, and he's still doing the same thing, and helping us with exam creation and content creation. So I've been trying to get Ob and I to sit down for quite a while, and because of our the time difference, and also because of how busy we both are, it's been tough. But I really appreciate the ability to talk to Ob Chapman. Ob, how are you doing this morning?
Thanks, John. Thanks for that very glowing introduction. I'm not sure it's all worth me repeating, but it's been a long career. I started in banking in 1960. Computers didn't exist. I wrote hand ledgers. So
Right.
I'm probably what you could call part of the Jurassic Park group. I've seen the evolution of banking and financial services through a range of things. And it's interesting. I keep going back to basic principles like law is sovereign, commerce is global, and technology is an enabler. And we really do need to understand where the gaps are and where the misfits are. And if I go back to my banking days and looking at simple things like I'm banking with Westpac in Sydney, I'm sitting in a hotel in Kuala Lumpur, and I'm negotiating a purchase from Amazon in America, and it's a fraud. Where did the fraud occur? Which country, which law enforcement body will actually take this up as a case? And so we've got all of these conflicts, and I think we've just seen this getting more and more complex as to where the world is going in this. And so I'm optimistic about where things are going. I've got to say, I think we're starting to get the act together across the world, but we do recognise that it'll never be one regime, simply because of people's different cultures, the technologies that are available. The very basis of law is different in different jurisdictions. And so that makes it very difficult for practitioners such as you and I to work out how we advise our clients, how we support them, and what we recommend is best practice, and then helping law enforcement and the authorities. So it's a pretty exciting journey, and I'm thrilled to still be part of it.
My first trip to Australia was in 1990, and I recall meeting with the folks at Austrac in 90 or 91. And I know that's roughly, I mean, you've been doing the financial services longer than that, but that's roughly when you sort of entered this space as well. And I remember at the time being very impressed with what Australia was doing at the time, because FinCEN was created basically around the same time. But I think it's fair to note that Austrac was really the first FIU, and I know Austrac and FinCEN shared a lot of issues going forward, and they talked a bit. In fact, when I arrived, again, no technology, no internet at that time. What struck me is I met with the director of Austrac, and he had sitting on his desk a comment letter to FinCEN that I had written about the AML regime that they shared with him. So, but
Yes.
it was a paper comment letter. But even at that time, and you were in the bank, and I was at the Bankers Association. There was this strong feeling within our community. Now it's much broader community, that we wanted to be supportive. We wanted to partner with law enforcement and regulators. We wanted it to make sense, right? We wanted it to
Absolutely.
make sense. So toward the end of our conversation today, I want to ask you how you're feeling about where we're going. But one of the reasons we wanted to talk today is relevant to that. Does it make sense? And that's the most recent second stage consultation on reforming Australia's AML CTF regime from your AG's office. So this is the second stage. It was issued on May the 2nd. Public comments are due, I believe, on the 13th. Yeah, Thursday the 13th, according to the website that I'm quickly looking at here, although I've looked at it earlier. And it's a series of proposed reforms. So before we go into some of the proposed reforms, what has been the process thus far? This is the second consult. What's been the process, and how active have you folks in the private sector been?
Uh, I'd say that there are quite a few people in the private sector of the same background as I am. And we've been agitating for this for a long time. I won't spend a lot of time on it, but if you go back to 2006, when Australia introduced the AML CTF Act and we moved from the old Financial Transaction Reporting Act, the then Attorney General said, we are moving from a reporting regime to a financial crime risk management regime. And that was quite a big watershed. It was more about understanding the risks as opposed to I've got to report transactions to the Financial Intelligence Unit. Since then, the desire of the governments of various political persuasions to introduce the second tranche has been deferred and deferred and deferred to the extent that we're, up until last year, we were one of 5 nations, including your own, that were not compliant with a lot of the requirements when it came to DNFBPs. And so that's not a club we wanted to be in. Fortunately, things have moved ahead very, very quickly with the current government. And the previous government, to their credit, were doing some of these things. But I think it came to a head when the FATF produced that report on Australia, the fourth the fourth report on technical compliance, and they issued that in March. And that was a call to arms, and the Attorney General really got onto that and said, we are moving forward. Now, that's in between the first consultation, proving that they were moving ahead, and this second consultation. What does it tell me? And you mentioned the dates, and that is that they got over 140 submissions to their first consultation from April last year, and they've clearly factored that in, and they've taken their time to do that, and therefore there was a delay in issuing the second consultation papers. But I think they start to flesh out where the government is going, and it's not too far from where they suggested they were going when they put the papers out in April 2023. What the difficulty with all of this sort of thing is because what does it mean to me operationally? I can read the papers, I can have lawyers tell me what is required, but it's the question of how will it work. And so this short consultation period now, I think, signals that they're moving ahead very quickly. And the best projections that we've got, and there is no confirmation from the government on this, is, of course, that the consultation period finishes on the 13th. We're expecting the draft exposure bill of the legislation to issue in August. Now, that could be a little bit optimistic, but that signals to me that things are moving very fast. And why have we picked that date? Well, if you work backwards, right, the next mutual evaluation of Australia is mid-2026. So if you then look at the methodology that FATF now has on assessing technical compliance and so forth, they'll need a period of time of practical application to actually test. So that takes us back to, let's say, mid-2025. So if you've now got to be running with the new system by 2025, that means you've got to have the legislation in very early 2025 at the latest, but hopefully late 2024, so that people can start to implement it, because these things can't be done overnight.
Right.
And so I think that we've now got a very complex but fast-moving environment.
Now, is it fair to say, based on that, so obviously part of the driver is the mutual evaluation, and I don't know that it's a possibility that Australia would be on a gray list. I would find that hard to imagine, given, again, everything we've said up front about their structure over the past decades. But they obviously don't want the criticism. And to your other point, in the U.S., back in 2006, when we were evaluated back in 2006, one of the key criticisms was our beneficial ownership infrastructure, which really didn't exist. And it took a long time to get those laws in place. We're still implementing today. So to your point, it's going to take a while. And as we both know, FATF now, when they measure during the evaluation, they measure effectiveness. So it's not just you have the law in place, how effective is it? And you can't know if it's just been implemented, to your point. So that makes a lot of sense. But to your other point, everybody, no matter where they are, can understand there's a short window here. You've just got this in May, early May, and you're supposed to have detailed comments because you want to be comprehensive. But June 13th, I mean, that in a way that's a little crazy. I mean, obviously, you folks, I'm sure, have had ongoing conversations in general, so you had some idea of what might be proposed, but you didn't see the specifics, right? So, let's talk about some of those. Again, just very quickly, going to the website, and I want to go specifically, they say in their summary of the reforms are to simplify and modernize. Who can be against that, right? The regime. Reduce complexity and regulatory burden on industry. Well, we all want to see that, obviously. Make sure they respond to a constantly changing threat environment. You know, the U.S. has put out priorities and threat assessments, and Australia's done something similar. And this is their wording: harden Australian businesses and sectors against exploitation by serious organized criminals. Sounds like a great mission, probably pretty tough to put in place in terms of regs and laws and guidance and all of that. So that's their overall thing. And you folks have a task force, a reforms task force, which you were kind enough to share with me. Let's talk about some of those. And I know there's a lot here, but I'm interested in some that have some parallels to the States so that people can understand that. And that's the real estate, the professional service providers, and then there's some more there regarding sort of the AML structure in general. And then, of course, anything you want to mention. But let's walk through, from your perspective and your colleagues, some of those. What are some of the positives? What are some of the challenges? Give us a sense of how you're looking at some of their proposals.
Certainly, and real estate's a good one to start with because it's a diverse population of people that are involved, businesses that are involved in real estate. Do we have the large nationally operating franchise type networks of big real estate companies, the LJ Hookers, the Ray White and Associates, the Harcourts, companies like that are spread across Australia, New Zealand, and so forth, and they have agents. Now, one of those agents, on a little hypothesis here, is Auburn Bev Chapman at North Richmond in north of Sydney, and we have one girl that sits on the counter and takes phone calls, and I help customers buy and sell houses. I can't spell AML, let alone understand what it means.
Right.
So what am I going to do? Now, fortunately, the reforms are suggesting that the whole concept of the designated business group, as we've got it under the current regime, will be broadened to take in a more holistic corporate structure of what does a business group look like, which means that Ray White and Associates, a global franchise, and we just take that as an example, a national franchise, they can actually set up an FIU, if they will, and do all of this for all of their franchisees. Now, there's a precedent. People say to me, oh, that won't work, and it will, because we do that under the current law for all of the remittance sector. Mm-hmm. We look at Western Union, we look at MoneyGram, we look at RIA Financial Services. They do this for all of their agents. And the agent's just a news agency, or it's a bakery or whatever, and they do some little remittances for their particular local environments. So I think we've got a model going forward that says this is brilliant. I think from the regulator's perspective and the FIU, this is perfect because they've got centralised expertise managing it on behalf of a diverse network of little service providers, and it's usually not their main line of business anyway. Mm-hmm. But real estate is interesting in understanding what will be caught and what won't be caught. There were suggestions early that leasing would be caught, but it appears that that will be probably carved out other than some short-term leasing because it's just too complex. And one has to keep going back to what are the basics of this. This is about mitigating money laundering and terrorist financing risk. And you have to ask yourself, where does that occur? And what do we achieve? Or are we simply putting processes in for the sake of processes? And I think they've really woken up to that very, very much. And so that gives me a great heart that this will do. Now, the other beauty thing out of what they're proposing in the real estate is the reliance on third parties for the customer due diligence. What does that mean in a normal domestic buy and sell house transaction?
Right.
Can they rely on the bank who's providing the mortgage because they've identified the buyer? What do they do about the seller? Now, that has its other complications because we have a lot of vacant property in Australia where the owners are, in fact, people overseas. And they've moved their money here to buy real estate with a view to selling out and making a profit at some point in the future.
And some of them are oligarchs, like I
You've
mean,
got it.
that's what we have in the States. That's part of the problem, right?
Absolutely,
Yeah.
absolutely. So and I mean, we probably shouldn't talk nationalities, but you're right. We've got a lot of Russian oligarch money. We've
No
got a lot of
question.
Chinese money.
Absolutely. Yeah.
And ostensibly they buy the property so that the daughter who comes down to go to university can live in it. But in fact, they've actually bought it because they've moved value out of their own country to what they see as a safer environment where their government can't get hold of the money. So I think we've got all of those sorts of things. And I go back to the Auburn Bev Chapman real estate and saying, I will have no idea who the vendor or the purchaser really is. I just take it at face value what they tell me. So I think there's a lovely framework here that will give the real estate more certainty, as well as understanding the inflows and the outflows. Now, we're fortunate in Australia because our regime covers international funds transfer instructions. And therefore, we see all of the money coming in and out. We don't always connect it. We don't always connect it, but we do see all of the money coming in and out. And that clearly in the reforms is going to get even stronger.
So wire transfers, forgive me, I've forgotten, but that stuff gets tracked by Austrac, no?
It does.
Yeah.
It does. And I was involved in the start of that. I was still at the bank, and we convinced Austrac that they needed to have all of them, that there would be, New Zealand doesn't, they have a $1,000 limit. But we said, we're going to give the lot to you.
Right.
You can have the bucket. And of course, that assists law enforcement because often these things are spread across multiple institutions.
Right.
And so they have better intel feed.
So the other one is, well, another one of the issues I want to talk about is enablers or gatekeepers. That's obviously something that FATF has talked about constantly. Accountants, lawyers, and others. As a lawyer myself, I know that my the American Bankers Association, American Bar Association, forgive me, has always been opposed to any requirements that you report potential illegal activity from clients. How is that being received, the gatekeeper proposal in Australia from your perspective?
I think it's a mixed bag at the moment. There are the deniers. There are those that say professional legal privilege. This is client confidentiality. I shouldn't be doing anything. To those that have realised that the game has changed and they need to be on board. And I think if we draw here in Australia the comparison of New Zealand, who went a couple of years back with lawyers, accountants, and real estate all being involved, and it's bedding down well. They've got problems. They've got problems with the small law firms. Because there are many sole practitioners and they have issues. Again, I'm drawing the parallel with the real estate. Do they really understand what this is about? From the bank's perspective, I think it's rather interesting because if you're a banker and you're banking a law firm or a real estate firm or an accounting firm, they're running escrow accounts, trust accounts. And do you actually understand whose money that really is?
Right.
It's not so I think there's a merging there that I think is going to give some real benefit and help this really work. The big firms are definitely on board. There's no doubt about that. They've realised that the game has changed, and they're you can't keep pushing back the ocean. It's happening, and that's how it's going to be. I think there's still, I won't say denial. I'll say ignorance. Might be a better word in the small single practice accountant or law firm. There are 90,000 lawyers in Australia, and many of those are sole practitioners. Or Chapman and Associates. The associate happens to be my wife.
Right.
I've got 3 girls, and I'm doing conveyancing, and I'm running a rent roll. Where I'm collecting the rent from tenants in my customers, my clients' businesses. So I think there's a lot of ground to be going there, but I'm confident that what they're putting in place will be fairly straightforward and simple. And I go back to points that they're caught by a lot of legislation already. They do have to know who their client is.
Sure.
It's not necessarily that they've got to introduce another regime of customer due diligence. The answer is, have I got a procedure in place now when I onboard a client to give legal advice to? I don't need to know who they are and who they're dealing with. Otherwise, I can't give that legal advice. Therefore, those processes should be compatible, and I should be able to rely on those. And I think that's where the common sense, that's the simplification that we talked about earlier, John.
That makes a lot of sense. And obviously, as we both know, you certainly can have a solo practitioner that has criminal clients. I mean, and
Oh,
so just and also, I totally agree that most countries' jurisdictional laws cover potential illegal activity without
yes.
putting this in place. So they're used to that. Um, I am going to give you a chance to talk about anything else you want to cover, but I'm very interested in the section, and you were kind enough to share with me some of the other things that you folks are looking at, and that's paper five. Paper five is characterizes broader reforms to modernize the regime and uh, under the category risk-based approach. And what's always makes us in the AML community sort of smile a little bit is that, we've been talking about risk-based approach for 25 years. We agree that that's how the supervisor should handle um, how financial institutions deal with transactional activity. It should be we focus on priorities, we make a decision that we're going to spend resources here versus there. We're not going to ignore that other area. But the risk-based approach includes a risk assessment, so obligations there, to look at the nature, size, and complexity of the business, which is kind of generally how risk assessment should work. As Rick Small, our friend, always says, in the U.S., risk assessments are not, quote, required. But if you don't do them, how do you have any understanding
Yeah,
of
exactly.
your internals, right? So methodology must be part of the program. The assessment must be updated they say here, every 4 years, and approved by the board and senior management. Uh, Obviously, all those things have been handled in other jurisdictions as well. What's you and your colleagues' general take
Yeah.
about that, both the risk assessment and the need for a risk-based approach?
Well, we have a risk-based approach now, and
Mm-hmm.
we do have risk assessments. And if you look at it in a hierarchical sense, the board issue a risk appetite statement or a risk tolerance statement or both. That should then instruct how you do your risk assessment. And
Right.
it could be credit risk, it could be human resource risk, it could be any of those type of risks, but we're talking about financial crime risk here. Um, and though, if that's done properly, then you're able to categorise where you should spend your dollars to combat the larger risk. Now, then that should then instruct where you put the controls in place in your AML program. As an auditor, I find quite often there is a big disconnect. They've done a great risk assessment. They've assessed different types of customers, different types of products as having different risk. Then I see that they've put in the same control across every product, every customer.
Wow.
And the answer is, hang on, this is just a nonsense.
Right.
The other thing that I think is coming out, and this is a slight digression, is
Mm-hmm.
that the risk the risk environment is getting bigger. Let's look at environmental crime. Many of my clients have no risk assessment about environmental crime, yet they're banking foresters, they're banking fishers, they're banking waste, they're banking all sorts of clients that present to potentially a higher risk. And so we're seeing this child exploitation. There are a whole raft of new things coming in. So the risk assessment's getting wider. What I think is the big change, John, is that they're proposing you've got to define your methodology.
Mm-hmm. Mm-hmm.
You've actually got to state now how you actually came up with the risk. And it's not just saying we read the AUSTRAC paper on risk for this sector. You've actually got to describe how you went through it. Who was involved in it? Did you outsource this to a consultant like Orb to do? And I always challenge those. I'm saying, that doesn't mean that you understand your risk. You have to do this. Who owns the risk? If we look at the 3 lines of defence model, hang on, business, line 1 owns the risk. Do the frontline staff, the managers of the branch, do they actually understand the risks that they've got? And often that's a breakdown, and they rely on level 2 being the compliance. So I think this sort of thing will help bring that whole regime forward. And as you know, in paper 5, it suggested we're talking about more emphasis on the training, understanding risk. And it is rather interesting that young staff, frontline staff, actually rise to this. They really do try to understand their customers. I see tellers in branches of retail banks who really do know their customers' business.
Really?
They probably know more than the senior management because they're dealing with the customer every day.
Sure.
And some of the best suspicious matter reports that go to AUSTRAC have come from frontline staff, the people that are actually dealing with the customers. So I think that education of the staff is good. it goes back to things like risk tolerance statements and risk appetite. We have no tolerance for non-compliance with the law. Is a lovely motherhood. Well, what does that actually mean when I'm talking to the branch staff that are lending the money or dealing with the transactions? And so I keep, as a consultant, looking at this from the operational perspective. Having done it for a large bank myself, historically, the answer is what, how. It's not what, it's how. How can I make this work given my environment, my clients, my products and services, and my distribution channels?
The last thing I want to comment on, ask you to comment on, and then do a broader final question. But the last thing is, there's a section in here on the compliance officer has to be certified, will be mandated for being responsible for the program. They must report annually to the board, which is something we see in the States. The CEO will be able to make rules in relation to it. But you had said to me before, when we talked last week, that Austrac would, and if I got this wrong, certainly correct me, would actually have to approve the MLRO. What is the proposal in general for the compliance officer responsible for money laundering oversight? Give us some, I know there's a number of sections being
Yeah.
proposed. Talk to us a little bit about that whole area.
Yes, indeed. At the moment, every reporting entity, and there are 14,500, 15,000 reporting entities at the moment. We're going to go to 120,000
Wow.
under this new regime. So, wow. So that means a whole lot of AML, CTF compliance officer, or MLROs, as they're called in other regimes.
Right.
It says at the moment that they should be of suitable seniority and report to senior management and the board and have some independence. Now, when you look at the whole ecosystem of reporting entities, that goes from, say, a Commonwealth Bank, the biggest financial institution in Australia, to a mum and dad remitter who are doing 20 transactions a month. They own the business, and they are the owners as well as they are the money laundering compliance officer and so forth. Where's the fit and proper test? What is suitable for what type of industry? So I think the fit and proper test is going to have to be very carefully manufactured to accommodate that wide range of responsibilities. If I'm a grocery shop and I'm doing remittances from Australia to Sri Lanka, because most of my clients are Sri Lankan, most of my customers are Sri Lankan, then that's the one product I do. Maybe I don't need the same skill set that I would if I was the MLRO for Westpac Banking Corporation. And I think that that's going to prove very interesting. Now, Austrac is, I think, going to be very interesting to see how would you assess whether a person is fit and proper.
Right.
Does that mean, and I'll jump back into an example here of, let's say, does that mean that someone should have done the CAMS exam from ACAMS or the ACI exam or whatever? Is that what it means? Well, if I was that mum and dad grocery shop, the answer is that would be ridiculous. That would be absolutely ridiculous. The other one is that, and it's allowed now, but I don't see it coming out, but I will in the exposure bill. Can I outsource that role?
Mm-hmm.
If I've only got 5 people in the business, can the AML? I'm the AML compliance officer for two businesses.
Mm-hmm. Mm-hmm.
Now, I'm not their auditor, obviously I can't be that, but I sit behind their risk officer and I actually do this work for them because they have not got the capacity or the capability to ever be able to do it properly.
That's really interesting because in the States, the regulators came out a couple of years ago with a document that said you could share Bank Secrecy Act resources. And the industry said, does that mean we could share BSA officers for like a small bank, like you said? And they said no because of the confidentiality of customer records. So they have to navigate that. So to date, as you know, as far as I know, because I've asked this every regulator panel I've moderated, I moderated a million of them. I've said, has anybody taken advantage of the sharing of resources? And at least the last time I moderated a panel, it hadn't happened. So that's a good point. Besides your obvious point that in a mom and pop shop, you should have some basic training, but that's different than having the same level of experience as Westpac or something else, right?
Exactly, John, and I think this is a real challenge, given the broadening of the types of activities that are now caught under this regime, and therefore the different business entities that are entering into this. You look at digital currency, you look at the payment rails that are all coming in now, the telcos and so forth that are facilitating payments. The answer is, where is that expertise? How do they build this? And so I think there's some real challenges. There's some great opportunities if one looks at it as a young person in the compliance field. I have young people ask me, do you think this is a full-time career? And I say, absolutely it is.
Right.
You can build a whole career. Where do you want to end up? Do you want to end up being the global head of compliance for Bank of America, or do you want to end up where, do you want to end up with one of the authorities? There's a golden career in this now, which there wasn't when I took it on back in the late 1980s. It was part of my role, not my full role.
No, I totally agree. I'm going to get you out of here on this, kind of a two-parter. What did I miss thematically that you want to make sure that people are also aware of in the reform proposal? And also, you said it up front when we started. How optimistic are you that the AG's office, my words, not yours, will get it? Will recognize all the unintended impacts and make some adjustments to really make this an efficient change in the infrastructure so that it can be successful?
I think there are several areas that authorities, and I'm bringing AUSTRAC here because this regime is different for a lot of regimes. We have an act, we have regulations, and we have rules. Now, most legislation doesn't have rules. And under this AML framework we've got in Australia, the CEO of AUSTRAC makes rules. Those rules come into force the day he publishes them, or she publishes them, and then they go to Parliament for disallowance. They've never been disallowed, never once. So it makes it very agile. And I was one of the people proposing this in the first place because the environment changes and you can't wait for legislative change. It just takes too long. So the rule system is good. That says that as they identify the need to carve out, the need to vary, then things will be appropriately done. And let me give one example under the current regime just to wrap up.
Right.
We have online betting. In Australia, Tabcorp, there's a whole raft of them. So mum and dad sitting at home and it's Melbourne Cup Day, they only have one bet a year. And they get on and they do it by BPay or whatever, and they make their $10 bet on the Melbourne Cup. You can't do the customer identification and everything before that. They're doing it 2 minutes before the race starts.
Right.
So the rules were changed for that industry to say you have to do the customer identification no longer than 90 days after you've taken the customer on board or when there's a payout, because you have no money laundering risk until there's a payout, because they can't use the money. So I think we're going to see some nuances that will allow for this to be practical for different segments. Look at over-the-counter derivatives and things like that. You're doing spot pricing, you're doing a whole lot of things. You've got to be able to do the identification after you've done the transaction. Otherwise, there's a price difference. So I think it's a complex world, John, but I'm confident that there is goodwill on everyone's part now to make this actually work. It's rather pleasing to see that even the US is now looking at, what should we be doing about gatekeepers, because it's such a big area of facilitating, if it's used illegally, facilitating illegal crime.
Sure. I totally agree. Chapman, so happy to be able to spend some time with you. Thank you again for all the work that you've done, not just for folks in the region, but globally. You've obviously been a key part of the ACAMS community as well. And for that, I continue to thank you so much. Thanks so much for what you do, my friend.
Thank you very much, John. It's been a real pleasure chatting with you.
Yep.